While the world's best tasting coffee is up for debate, one cannot debate the sheer dominance that Starbucks has had on the global market. Starbucks generated $26 billion in revenue in 2019 alone. That result is nearly double of Starbucks' top 9 competitors' revenue in the same year, combined. While Starbucks has set out to continue its stranglehold on the world coffee market, in recent years, a small competitor has emerged in an unlikely market that has threatened Starbucks' control in the world's second largest economy. This is the story of how a small coffee company challenged the market behemoth and later defrauded millions of unsuspecting investors. Luckin Coffee, founded in 2017 in Beijing, China, quickly grew to the second largest coffee brand in China by amassing 1,300 stores in a single year. Like all tech startups, Luckin focused solely on growth. Luckin spent 3 times its revenue by building its online infrastructure and brick-and-mortar locations. Luckin's number one priority was to expand quickly and take market share away from Starbucks. Luckin's secret sauce was their discounted coffee with a promotional marketing strategy that focused on discounts like buy one get one free drinks and an online platform only accepting in-app payments. Being a data-driven brand, they knew their customers extremely well and incentivized sharing drinks with friends with shareable coupons. This strategy was instrumental in Luckin's success and created a cult-like following with its customers. Slightly 2 years after incorporation, Luckin achieved its goal of overtaking Starbucks in January 2020 with over 4,500 stores in operation, thanks to massive spending and millions of loyal customers. Despite having 4,500 stores in operation, Luckin Coffee only produced 1 profitable quarter in its short existence. On the fast track to becoming a publicly traded company, Luckin went public on the Nasdaq in January 2019, 2 years after incorporation. Their initial public offering offered shares starting at $17, instantly launching Luckin's founders to billionaire status. Over the next few months, founders Jenny Qianjia and Charles Shengyao Lu would see their net worth triple as the stock price surpassed $50 per share. Luckin Coffee was quickly becoming a force to reckon with in the coffee industry with a value of $12 billion at its peak. With promises to build over 10,000 locations, Luckin was on track to do what took Starbucks 2 decades to do. Expansion was underway, and Luckin was well positioned to disrupt Starbucks' industry dominance in China and eventually the world. In late January 2020, Muddy Waters Capital, a research investment firm known for exposing fraudulent business activity, released a statement detailing its decision to short Luckin Coffee stock. Shorting, or short selling, is when an investor borrows shares and immediately sells them, hoping that he or she can scoop them up later at a lower price, return them to the lender, and pocket the difference.
There is trouble brewing at Luckin Coffee. Luckin stock plunging over 80% on Thursday after it disclosed that its chief operating officer inflated 2019 sales by about $310 million. The U.S.-listed coffee chain suspended its COO and several other employees, adding that an internal investigation was at a preliminary stage. It said that investors shouldn't rely on previous financial statements. Meanwhile, China's securities regulator has responded. The CSRC strongly condemns Luckin's financial misconduct and says it will investigate the issue according to the law and will crack down on fraudulent activities.
That news immediately prompted the Securities Exchange Commission to investigate Luckin Coffee for fraud. As a result, Luckin's stock plummeted 80%, causing the SEC to halt trading on Luckin stock until more information became available, as several banks and retail investors alike lost a fortune in the process. The breaking news of the company's fraud led to an uptick in mobile app downloads. The Luckin app, normally sitting between the 70th and 100th most popular app in the Apple App Store, launched to the number 2 downloaded app in China. It is speculated that the surge in downloads were customers scurrying to redeem coupons providing free drinks. The surge in mobile downloads and increased usage did little to dent the damage done, as Goldman Sachs, an American investment firm, made the decision to seize the founder's shares and sell them on the open market as Shengyao Lu defaulted on a $518 million margin loan. With Luckin's fraud coming to light, many investors began questioning the integrity of Chinese companies trading in the American exchanges. Can Chinese companies be trusted to provide honest and accurate financials? Is Luckin the only company engaging in fraud, or are there others that haven't yet been exposed? Is my money safe in Chinese investments? History will tell us that greed does not have a face, but comes in many different backgrounds, ideologies, and belief systems. Enron, WorldCom, Theranos, to name a few, have all fallen into the trap of placing profits over people. Will Luckin face the same fate as the before-mentioned corporations, or will they somehow make it through this alive? One thing is certain, business going forward will definitely be carried out differently, and it will be more important than ever as an investor to do your due diligence. As the old saying goes, fool me once, shame on you. Fool me twice, shame on me.
There's an old saying in Tennessee, I know it's in Texas, probably in Tennessee, that says, fool me once, shame on you. If fool me, we can't get fooled again.
If this is your first time tuning in, drop a like and consider subscribing. Be sure to check out my other videos in the channel. Thanks for watching. See you on the next one.